Next up, a ban on short selling failed to keep the Dow from plummeting yesterday, and now some hedge funds are wondering why the rule was created in the first place. We're going to have that debate when we return.
All right, Peter, thank you very much. Well, even though the Securities and Exchange Commission's new short selling rules are in place, the financials on the Dow took a major hit yesterday. This short selling ban was supposed to prevent investors from allegedly driving down stocks in as many as, I believe the number is 829 financial companies. But the almost $2 trillion worldwide hedge fund industry, which makes the majority of its profit from short selling, could pay a heavy price for these new rules. For more on hedge funds versus the short selling rule and the impact, we turn to John Standifer. John is the Executive Vice President of Financial Services for S3 Matching Technologies. I'll explain what he does in a moment. And Patrick Morris is a hedge fund manager at Hagin Investment Management. Good morning, gentlemen.
Good morning.
All right.
Good morning.
Patrick, let me start with you. What have been the unintended consequences of this short-term ban on short selling rules for the financial companies?
It's a little early to actually evaluate it overall. I think that obviously there are some strategies that are going to be much harder to implement. I think that you'll find some managers, certainly the merger arbitrage managers, who are going to have a great deal of difficulty if they can't use the short side to hedge some of their positions. But I think that what ends up happening is the market's a very, very complex thing. And when you change one variable, like putting the short sale ban in, it can have unintended consequences over time that you don't learn about until not days after, but weeks, months, and years after.
I mean, Patrick, as I said to you on Friday, there was a storm of anger, not just from the short sellers or many of the hedge funds, but there were also the Wall Street firms who need to hedge their positions, whether or not they trade convertible preferreds or they trade options, and they needed that venue, another option. Are we, in essence, taking out a very important system within the markets that creates a fair and balanced marketplace?
Well, I think there's sort of several answers to that question. The first is, obviously, I think what people were upset about is it seems like they changed the rules mid-game. So, in effect, you have some managers who will say, wait a minute, I have good fundamental reasons to be short some of these stocks. You'll have other managers that use them for very appropriate hedging, for risk management strategies. So then you have to start making special exemptions for people that are actually shorting for, quote, good reasons. I do understand that it may be perceived that shorting is betting against a company's success, and that may seem immoral or wrong or a bad thing to do, but in a lot of cases these hedging techniques are necessary and they're actually quite useful. Yeah.
All right, John, what you do is you actually analyze the impact of short selling on the markets, particularly on the stock market performance. What has your data shown thus far about the short-term move we have made on preventing short selling in these financial names?
So what we saw on Friday is, with the large market rally, we did notice that approximately 19% of the symbols on the short sell list still declined. This was very similar to the number of symbols in the overall S&P 500 that also declined, which led us to the conclusion that the short sell ban did not prevent these symbols from moving on their individual fundamentals, and some of them declining. The largest decliner from the list from Friday was Ambac Financial, down over 40%.
So, John, does that assume then that the pressure on these stocks can come from many other places, not just the short sellers? I mean, first of all, the long-only institutions or mutual funds, pension funds, et cetera, but also through things like the options market, through things like the credit default swaps market. Are you seeing increased activity in those areas as that order flow is redirected in another place?
Absolutely. There can be selling pressure from, as you mentioned, the long-only institutions who are concerned about the ongoing issues in the financial sector. Many of these companies, even the survivors, are going to have their earnings power significantly reduced over the coming years. You also have long-only managers who were margined or leveraged, and so as the stock prices decline, they're forced to sell long assets to meet margin calls. And the root problem is you basically have a lack of buyers in a lot of these symbols.
Patrick, you know, when I talk about the credit default swap market or the options market, from what I understand, particularly in the credit default swap market, which is another way of sort of betting on the insurance that there's default risk, that they're seeing that activity balloon in part because of these short sell rules. Do we have to make sure that if we're going to change the rules mid-game, we're keeping a fair and orderly analysis of all of these other venues where shorting activity can occur.
I don't know if you're familiar with the term the fog of war, but it's such a complicated thing.
Yep.
Making adjustments in the market to try to direct it in a specific course to achieve a specific goal is very difficult because there are so many players, and it's a global game now. And in a lot of cases, it's almost a 24-hour, 7-day-a-week game. So how do you affect the market with one set of regulations? I think the big issue is, how does this bailout plan actually work? You can't make people fall in love with financials and go long those stocks if you don't resolve the underlying issue, which is that they do have some bad assets on the books, and you have to resolve that. Otherwise, once the short sell ban comes off,
Oh, forget it.
down they go.
Down they go. I've been saying that, you know what, the end of this 2 weeks, at the end of the 30 days, it's going to happen all over again. I hope it doesn't. I hope they come up with a good resolution. But Patrick and John, great points. Thanks so much for joining us this morning. All right, well, some of the world's best